Hey guys, so on to the Usdcad. Monday the 8th of April, it's currently 20 minutes past 3 and we are well underway into the New York session. So Usdcad, as you can see, I have the zones, the ranges. Last week we double bottomed at 3.3 from the last episode of the Astro tracking on the secondary videos last Friday. I did hint and I did state that 3,400 up here, the psychological level. As you can see, we had 1, 2, 3 spikes into that. But similarly to the GBP AUD over on the 4-hour time frame, we can actually go ahead and place a Fibonacci on the Usdcad. So going from prominent highs down to the lows here, where the double bottom is at 3.3, so A into B, you can see that the market did rally through our zone. We have this zone on here, I'm sure you guys remember, 3374. Peak of the wick into the zone. We spiked up through it into the day, but we also closed back below the 61.8 handle. As you can see, market has sold off so far, and here again, this is an ideal scenario and a good example of building confluence in the market for a target. Target projections all the way at the lows at more or less 3260, taken from the body down to the wick 3249. 3249. You can clearly see that we have A, B, C retracement. What's good here though is that in terms of an entry, if you spot this occur, you can go short. You want the stop to be 3 to 5 pips above the high of the wick. I did mention if you do have, again this is on the Fibonacci video in section 1, if you do have reversals within the region, you then have to utilize the placement above 78.6 to give the market some breathing room. What we also seen here too is moving averages are now crossed over, as you can see, and from there onward 3374 the market crashed back through. We have a 4-hour IDL level, intraday level right there, just taken from the bodies, simple trend line tool coming across, but you can also see that after the rejections, market rolled over, closed below, and now we're getting follow through. We can see that from the current market price at 1.3325, looking at 1.3257. So we have less than 100 pips to fall in this case. And if we do actually come to, again, prominent high, lower swing high, new lower swing high, we're looking at taking this level out. Ultimately, overall, the daily, we can maybe sink into these levels down here. It'll be something to track and consider. But you can also see now, if I remove the moving averages on the day, the MA has just crossed below the 8 EMA has just crossed below the 14 EMA, so the 4-hourly and the daily are now in alignment for shorts. Once more, final point I need to express here is that where the current market price is now, we're back below this range. We're back below this range now. So we faked, we had a fake out Fibonacci on there, 4-hour daily Fibonacci, and now as we are back below this level, we are looking to roll over. So I hope that helps. Let's catch up with this one very soon. Okay, so April the 10th, let's go on to the Usdcad. Starting on the left side of the fence. Remember last week we had the closure and we just had the rejection of the 61.8 Fibonacci. Being said, as you can see, price boom came through back below that midterm range that we had on. Price didn't exactly rally into the upper region. We respected 61.8 from A, B, C retracement. I'm now looking for the next downside target on Usdcad, which is going to be the minus 27%. What we also did is we found a low, base low, but we made a new low past the previous and the previous. This one only took out the previous weekly low at the double, more or less mini double bottom at 3.3. And 3.3 is an important figure. And we made a low past that one as well, back to the 0 fib after making the retracement. And right here, right now, 1.3284, market pulls back into the zone, taps, as you can see right there, rejects the lower base of the zone. Let's look at the day. Daily Usdcad, still choppy, still messy, but here we go. There was Monday, brought it right in. Tuesday, Wednesday, we went up for a retest. The moving averages are still down. So in the midst of all the choppy price action, what we have to do sometimes is just take a little bit of a step back and just monitor more or less the 4-hourly and the daily. Look for the waves, look at the larger term picture. And we also have the daily fib, which points pretty low on this chart, which we will be tracking very, very soon. But I am looking for 1.3100 perhaps. But it does depend on if we can get a clear and breakout of this low. I believe that the minus 27 does hold some substance, 1.3257, and we also have obviously the lower end wick right there, taken to the body for the zone. So right now the MAs are down on the 4-hourly, they are down on the daily. Other important factors are, if we actually zoom in a slight tad over here, H4 intraday level brought across. As you can see, market penetrated that. That in itself is also a sell execution, because we've gone from one structural zone, from boom, boom, and we broke through into the next one. As you can see, I also duplicated that across and beyond. And we can maybe say there's confluence, one confluence, two confluence in the way in which the market pushed into that region and reversed and rejected and flopped. So all I'm looking for now is a potential rollover. The market, if we can say this is a prominent high, lower end swing prominent high, even more of a lower swing prominent high just here. USDCAD for me, we're about to roll over into this region. So let's see how market plays out into the London session tomorrow, which is Thursday, and then into Friday. Let's see how well we can recap this. Hey everybody, dollar CAD. Let's take a look at the right hand side chart at the moment, flip chart, Astro flip. As you can see, consolidation. There's not really much to take from here other than obviously the fib. It's better judged just because we are in consolidation. We're not trending up or down, because when we use the Astro flip chart, we're more or less trying to get the alternative scope of the direction to pull it together and bring it in as one. But we can clearly see we're in consolidation, so we know that we're rebounding from level to level. Now, from the last vid, we were hanging somewhere around here. Market came back up and gave us another test of 61.8. And in the test, then we were sat on 1.3375 once more. Similar scenario, look at this, 1, 2. Simply extend that bridge across. We broke through, retest, boom, collapse, and then we broke through the secondary miniature handle right there. So now, looking at the day, so I put the candles black just to eradicate some of the colors. Another mini trick I have that can help us with psychology sometimes, and we can just focus on wicks and levels more so, rather than the colors of the candles that can throw us off. I'll speak more about this later on, but just run with me for now. So we have the obviously bearish engulfing, which just came down. So the price consolidated, came up, bang to 61.8. Next day, bang, similar scenario, bang, 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 bang. So what I'm looking at now, even though we do have a huge supportive level around here, especially at 1.33, will price now dump and take out that level into 1.3250? Who knows? If we look at the weekly is still playing around quite a lot. I mean, last week we had the spike to the downside and then we closed above. And then here, as you can see, open, bang, bang. A lot of mess to be fair. But now, if you can see the weekly once more, look at the wicks, 1, 2, 3, 4, 5, 1, 2, 3, 4. You can clearly see, guys, why this is having issues with this area. Once we take out 1.3250, which is more or less the lower end of some of these wicks and bodies, the market will boom, smash straight all the way down to 1.3, maybe even beyond. Probably looking at a move from this high to the low, this high all the way down here. But what can also happen is we spike into 1.3250 and then rebound. So we're kind of in a very, very neutral level right now, an area. If we move the candles away, we can see the MAs quite possibly beginning to turn around. But we just have to be quite careful with this one. For me, I do believe that the Fibonacci extension will be hit, and if you can remember, we have a fib from A down to B, which brings us around to 2900 level. USD CAD, yes, we can. What I can also put on here as another precursor is if we go to parallel channel, we can use the parallel channel tool as a range, a slanted range. So what this is good for is spikes. And what it's also good for is, just as we have the regions and the ranges for flat areas, we also have this for the slanted areas, guys. So what we can often expect is, let's say the market pushes through, instead of just a standard trend line, that the market may push through, tap into here, then reverse. So what we need to do is we actually need to take out the entire range. So the same thing, it goes from the body down to one of the wicks. Okay, you might have here in this cluster formation, I've took it from the body more or less to the lowest wick there, or the equal low wick, brought it across. So USD CAD for me, that is what I'm looking at. I'm looking at that area being smashed through, but it can also spike into it and rebound. So I'm going to leave that on there for now. Daily time frame is quite important with this one. Super important, because yeah, once we have a daily closure below here, I think we're going to snap this zone and then head to 3-1. But we'll cross that bridge when we come to it. We can also see significant high, lower high there, and if you look at last week's top, it is lower than the previous high. So we are making progress to the downside. It's just, again, this level right here is quite frustrating for USD CAD. But yeah, that's all I can really say and state about this pair right now. Let's go on to the next one. I'll catch back up on this one on the Monday.